Do you dream of retiring and living off your dividends one day? Well, today I have for you 3 great dividend stocks that all have high dividend yields and are low risk investments in your portfolio. Be sure to stay till the end because the last stock I'm going over has a dividend yield that's nearly 8%, so you don't want to miss that. ENB here sharing stocks that help you on your investing journey. The first company on our list is a triple net lease REIT, and that is WP Carey, ticker symbol WPC. And WP Carey focuses on owning and leasing high quality single tenant real estate through long-term contracts. And it also benefits from the significant diversity of nearly 1,400 properties and 400 tenants throughout North America and Europe. Over the last year, WP Carey has grown nearly 11%, bringing them to a current share price of $83.97. WP Carey is above its midpoint of its 52-week range, close to its high of $89. It has a price to funds from operation of 16.28 and has a high dividend yield of 5.07, which will give you annual payout of $4.26. On its income statement, looking at its revenue, we can see here that it has been growing year over year, which is great to see. It was a little stagnant during the 2020, and now it has started to rebound and make revenue, which is good to see. Moving on here to its net profit, we can see that it has been growing year over year with a slight dip last year, and it's been able to rebound off of that, which is great to see right now. As far as its earnings per share, it has been growing year over year, which is good to see with, once again, a slight dip from last year, but it's being able to rebound and start making close to the same amount it had around 2020. Now, as far as shares outstanding, since WP Carey is a REIT, we are not so much concerned with them issuing shares because that means that they're acquiring more properties, which is what we want in a REIT. So looking here, you can see that they have been growing their shares, and as far as the dividends, they have also been growing that year over year, which is good to see. Now, as a free cash flow, they have been growing that year over year, which is really nice, and they have a 5-year average of $777 million. Wall Street analysts are considering WP Carey as a buy right now with the average share price of $86, and that'll give you about a 3% upside. As far as the price range where I'm looking at for my analysis, I have a revenue growth of 10, 12, and 14%, profit margin of 25, 28, and 30, free cash flow of 45, 50, and 55%, and all these are in line with the historic value. For PE and price to free cash flow, I have 15, 16, and 17 with the 12% return, and that'll give me these values. And looking about my mid-range, we are right in between the $50 and $90 range. So if you agree with these, WP Carey may be right in your wheelhouse as far as a good investment for long term. From late December, WP Carey has been hovering around that $77, $78 range, and then at the beginning of the year started to move through all of its moving average, making new highs. So we are at a resistance point around that $83 range. However, looking here, we are still in the overbought area and have positive momentum. So if we continue having buying volume, we could break through this $83 range and make new time highs. However, if the trend does start moving in the negative directions, which it may do so because you can see right here, it's starting to dip over. WP Carey may move through its moving averages back to around the $77 range, which is its latest support level. So keep an eye on WP Carey. Next up on the list has a market cap of $84 billion and is in the energy sector. This company is Enbridge, ticker symbol ENB. And Enbridge operates as an energy infrastructure company and operates through 5 different segments, which are liquid pipeline, gas transmission and mainstream, gas distribution, renewable power, and energy services. It owns extensive midstream assets that transfers hydrocarbon throughout US and Canada. Enbridge is the second largest natural gas distributor throughout the United States, and it is North America's largest crude oil pipeline. Over the last year, Enbridge has grown a nice 0.22%, bringing them to a current share price of $41.86. Enbridge is right in this midpoint with a low of $35 and a high of $47. It is trading at a PE of 18.81 with a current dividend yield of 6.33%, which will give you a nice $2.65 annually. Over on its income statement, looking at its revenue, you can see here that Enbridge has been growing year over year, which is very nice to see. There was a slight drop between 2020 and 2021, but now Enbridge is starting to rebound off of that and making higher revenue. Throw it on here to its net income. Enbridge did have a fall back in 2020, which is understandable, and has been rebounding off of that. We do have a slight drop based from last year, but Enbridge is getting back to the levels pre-2020, which is good to see. As far as its earnings per share, it did drop from last year, but it has been starting to rebound off of that fall in 2020. For shares outstanding, it has been grown slightly over this last year, which is not ideal to see, but being that it's been pretty stable the last couple of years, that could be because it's grown its infrastructure, which is also a good thing to see here. And looking at its dividends, year over year, it has still been growing those dividends, which is what us dividend investors want to see. So very nice for Aimbridge. Now, as far as free cash flow, we can see that there is a nice jump up from the last year, which they did have a dip from the previous years. So we are getting back to the levels of free cash flow that Aimbridge has had in the past. And they have a 5-year average of $2.25 billion. Wall Street analysts are considering Aimbridge as the buy right now with an average share price of $38, which is about 7% downside to the current share price. As far as my assumptions, I'm looking here at a revenue growth of 2, 4, and 6%, profit margin of 6, 8, 10, free cash flow margin of 6, 7, and 8%, PE of 15, 16, and 18, and a price to funds for operation, which is 15, 17, and 19, which is lower than what the historic average is right now, but just being on the conservative side. And I want a return of 12%. So looking right here on my high assumptions, I am gearing more towards in the low 30s as far as a long-term investment. But let me know down in the comments what you feel is a good price range for your long-term investment of Aimbridge. Since late December, Aimbridge has had a nice support level around that $38 range, and since the beginning of the year has moved through all of its moving averages towards this 200-day moving average, and right now is at the resistance point around that $42 range. Now Aimbridge is in the overbought region, starting to slightly turn over, but it still has a positive momentum. So if it continue to has good buying volume, could stay around this $41 range for a while and possibly break through it. However, if the trend does turn over in the negative direction, Aimbridge could fall through its moving averages back to around this $38 range. So definitely want to keep an eye on that. Next stock on the list has a market cap of $56 billion and is in the energy sector. This company is Enterprise Product Partners, ticker symbol EPD. And Enterprise provides energy services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products. EPD funds all of its equity from its free cash flow and 100% of its capital expenditures, which means that it expands without issuing additional debt, which makes it one of the most conservative companies in the energy sector. Now, over the last year, Energy Products has grown over 7%, bringing them to a current share price of $25.74. Currently, Enterprise is right in its midpoint of its 52-week range with a low of $22 and a high of $28. It is trading at a PE of 10.02 and has a dividend yield of 7.61%, giving you an annual dividend of $1.96. Over on the income statement, looking at its revenue, Enterprise Product has been growing year over year with a nice rebound coming off of 2020. So you can see right here, it started going back to its levels it had previously 2020, and now it has continually rebounded off of that with a large bump up, which is good to see. Scrolling on here to its net income. His net income has greatly increased from the previous years, which is good to see. It has been able to rebound and the increased values it has had in previous years. As far as its earnings per share, it had a drop last year, but it's been able to continue growing to levels it had previous to 2020. For shares outstanding, it has been pretty stable the last 2 years. It has bought back shares pre-2020, and right now it's been pretty stable year over year prior to then. As far as dividends, it has been growing year over year, which is great to see. As far as free cash flow, the last 2 years has been extremely well for Enterprise Products, coming off of around $2 billion it had pre-2020 and nearly doubling that, which is great to see. And Enterprise has a 5-year average of $3.55 billion. Wall Street analysts do consider Enterprise Products as the buy right now, with the average share price of $30, which will give you about 20% upside from its current share price. As far as my assumptions go, I have a revenue growth of 3, 5, and 7%, with profit margin of 5, 7, 9%, free cash flow margin of 6, 8, and 10%. As far as PE and price to free cash flow, I have 8, 10, and 12, with a return of 12%. And with those assumptions, I'm right above my mid-range. So if you agree with these assumptions, Enterprise Products may be right in your wheelhouse for a long-term investment. Let me know down in the comments what you think about Enterprise Products. In late December, Enterprise Products has had a support level around at $23, and beginning of the year, it has moved through all of its moving average towards its 200-day moving average, and right now has been hovering around that $25 range. Enterprise Products is in the overbought region, positive momentum, which is great to see. Essentially going to stay around this $25 range and hovering on its 200-day moving average. Enough buying volume, it could break through this 200-day moving average and making new highs. That wraps up the 3 stocks to add to your retirement portfolio. And if you enjoyed this content, let me know by smashing the like button. It helps grow the channel, and also spread the video to other dividend investors such as yourself. Remember, I'm not a financial advisor, so definitely do your own research before investing in any of these stocks. And if you'd like to see more dividend stock analysis, definitely check out this video right over here, and I'll catch you over there. Have a blessed day. Peace.